to this Baillie Gifford live webinar on the Baillie Gifford Japan Trust. I'm Katrin Schindler from Citywire, and with me here today is Matthew Brett, the manager of the trust. And over the next 45 minutes, we'll be discussing the ins and outs of the trust, its core philosophy, and how it fits into the bigger picture. And the way this works is I'll be picking Matt's brain with my questions for about 30 minutes, and then it's time for your questions. So if you have any, please submit them at any time via the chat, and then I'll put them to Matt in the last 10 to 15 minutes of this session. And on that note, Matt, let's dive right in. Welcome and great to have you.
Thanks very much.
Matt, the trust has grown to about £700 million since its beginnings more than 40 years ago. And over that time, it has generated a return of about 10% per year, which is more than double the 4% of the Topix total return index. So my question is, how did the team actually do that?
Yeah, so the team's process is fairly simple at its heart. What we try and do is find good quality businesses that can grow their earnings over the long haul. We try and put the money into those businesses, and then we try not to fiddle and just let those businesses grow over time and ultimately deliver the returns.
Mm-hmm. And when you invest in companies, you're in it for the long run, but do you think that sometimes, or at least now in light of rapidly changing market environments, do you sometimes wish that your investment horizon was shorter?
Well, actually, I think probably when markets are very jumpy and uncertain, I think in many ways it's actually easier to be a long-term investor rather than a short-term investor, because we have that North Star of trying to stick to those good businesses and just holding them through the ups and downs. Now, one inevitability of that approach is that we do have setbacks from time to time, and we were reviewing the last 40 years at the end of last year, and we found 6 occasions where the share price had declined by more than 30% over the 40 years. And so looking forward the next 10 years, we were expecting that might happen again at some point. But we certainly weren't predicting that it would happen within the next 12 months, which in fact is what has just happened. So obviously that setback is something that is a challenge for us as long-term investors, but we try and embrace that rather than doing anything differently, because we think it's only by accepting these style of setbacks from time to time that we can do the right thing in terms of holding the good businesses for the long haul.
Makes sense. And then the trust only started or restarted to pay dividends about 4 years ago, if I'm not mistaken. And how would you say have things developed since then from a dividend perspective?
Yeah, so you're quite right. The trust didn't pay a dividend for many years, but 4 years ago it started to pay a dividend again, and each year the dividend has been higher than the previous year, including during the difficulties with COVID. And I think looking at the underlying progress of the portfolio, it seems reasonable to think that the dividend is likely to increase again this year. But the directors haven't yet had the meeting in which that will be decided. So we can't say anything about the specifics, but certainly the underlying portfolio, the income has continued to grow. It's not our main focus, but I think it's naturally what you would hope to happen with a portfolio of growing companies.
Mm-hmm. Now, your trust focuses on Japan, obviously, but there are still many misconceptions around investing in Japanese equities. What would you say are some of the most prevalent ones that are out there at the moment?
I think probably the single biggest misconception is that the returns from a stock market are similar to the economic growth rate of a country. And we know that Japan, given the demographics of the country and given that it's already a very wealthy place, we know that it's not going to show super high rates of GDP growth. But for us, what's more important is to find individual companies within the economy that can grow into new opportunities. And as long as we have access to them, we think that we can still obtain good returns from investing in individual companies. And so we think that focus on GDP growth is often a distraction from the opportunities in individual companies.
Mm-hmm. And how do you go about finding those individual companies?
do is we try and look for areas where we see that there's more opportunities. So we end up with looking quite a lot at areas such as internet-related businesses, where I think there's pretty obvious growth opportunity there. Also, things like factory automation-related businesses, where Japan is very, very strong and there's increasing global demand for robots. And more recently, we've been finding opportunities in the skincare-related areas, where there's been quite a lot of difficulty in that area with COVID and the lack of travel, lack of people coming into Japan to buy high-end skincare. But fundamentally, we think these are very, very good businesses that have a long growth trajectory ahead of them. So that setback for us is an opportunity.
Mm-hmm. And changing tack a bit, we talked about this just before this webinar started, you've just came back from a trip to Japan 10 days ago. What changes have you noticed since that last trip and the trip before the pandemic?
Yeah, so getting into Japan has been quite difficult recently with the COVID-related restrictions. And prior to COVID, there were no difficulties traveling to Japan. But since then, you need a visa and a PCR test and things like that didn't exist before. So this is the first time I've been to Japan for a while, and in many ways it's just the same as before, which is reassuring. The obvious differences, some of them are really small things, like it now costs you 10 yen in a convenience store for a plastic bag, a bit like the charge in the UK. But the most striking difference right now is just the amount of mask wearing still in Japan. So almost everyone in Japan is wearing masks pretty much all the time. So both in a meeting where 100% of people were wearing masks, to even on the street, about 80-90% of people are still wearing masks, even outdoors. And this isn't to do with the law. There aren't any laws with regard to wearing masks in Japan. It's just the society feels that it's the safer thing to do, and people tend to do what other people do, and the end result is there's a very high rate of mask wearing. So I think that will fade over time, but basically Japan's still, at the moment, more in the pandemic, if you like, than perhaps the experience here now is in the UK.
New normal. And then speaking of changes, Japanese organizations have gone through some big shifts in attitude over the past decade. And how would you say has that affected their stance on things like corporate governance?
Yeah, I think generally Japan's been one of the few parts of the world where things have been swinging in favour of shareholders in recent times. So the corporate governance code and the stewardship code have made quite a big difference to Japanese corporate thinking. It's been related to, for example, this increasing dividends and buybacks, which we've seen a lot of in Japan in recent years. And also looking forward, many Japanese companies are thinking quite deeply about integrating ESG into how they think about things. And I think that conversation's now got to quite a productive level where they're looking for the win-win situations of, how can we make the process more efficient? And in doing that, there's benefits to the environment. It often makes the products cheaper. And, it's a kind of win-win type of situation that they're often looking for.
And if we look at the topic specifically, so up until the mid-2000s, it was mainly dominated by traditional companies. Some would call them old-fashioned. What's the situation like today?
Yeah, you're quite right. I mean, if you look at the topics of the past, if you go back to the kind of early 1990s, it was just basically big banks. And then, if we go back kind of 15 years or so, it's a mix of kind of big banks and big car companies. And as those businesses, have somewhat, faded in their relevance, we see a much greater range of companies now within even the top 10 in the topics. And one of the really nice things for us as investors in Japan is that, for the Japan Trust, we have well over 500 companies that are big enough and liquid enough to invest in. So it's a really broad opportunity set, which I think is slightly neglected as well. So that gives us a lot of choice in terms of trying to find, companies that are misunderstood, how good their growth potential might be.
Mm-hmm. And then considering that the focus shifts increasingly to tech areas, do you think that Japanese companies are able to give, say, Silicon Valley a run for its money?
I think it very much depends what we're talking about there. So, when we think about the big global internet companies, the reality is that most of them are still American, so your Amazons and your Facebooks and your Googles, companies like that, have been, pretty successful in Japan as well. But at the same time, what we see on the internet side is lots of opportunities for companies within the domestic market to do well. The main exception to that's probably SoftBank, which has been successful overseas as well. But most of these companies are exploiting similar kinds of opportunities, and we're buying them as fairly small companies and trying to let them grow into those domestic opportunities. And then if you look at the harder tech area of the market, then Japan has some very, very strong companies, and particularly as tensions have been rising across the Taiwan Strait. In many ways, Japan has a set of companies which, can continue to produce a lot of things that we want to see, in the event of there being any difficulties there. So I think on that hard tech side, Japan is very well positioned. And obviously, if we kind of extend the idea of technology also into, for example, that robotics area we were talking about, really robotics is dominated by Japan, a bit by Germany as well. Those are the two main countries producing high-end robots, and that still seems to us to be a really big opportunity going forward, as people are able to automate more and more different things.
Yeah. You just mentioned you buy companies when they're small and then you watch them grow. Is there a success story you want to share of one specific company maybe that made the way from very small to really a big play on the market?
Yeah, I mean, there's lots of different companies there that we could look at, but I mean, one that we held for many years that we've subsequently sold would be something like N3, which is a medical website company, which did very, very well. In the end, we kind of have recycled the money back into some smaller things again. But I think, there are many companies in Japan that, when you're starting at kind of, I don't know, about $1 billion in market cap, we can see the potential they have to get a lot bigger than that. And that would be the kind of thing that in general we're looking for.
Mm-hmm. And you've already touched on that, but what exposure does the trust have to the digital world on one hand and then to the physical one on the other?
Yeah, so that's a good question. At the moment, the trust, about a third of the portfolio is in internet-related and software type of businesses. So that's way higher than the Japanese market as a whole. And then we have about another 17% in robotics-related things. Basically, half of the portfolio is in internet and robotics-related things. And then if we have the kind of the skincare and the other consumer franchises, that'd be about another 10% of the portfolio. So those would be the main themes within the portfolio at the current time.
Understood. And changing tech again slightly, does the valuation picture in Japan keep you up at night these days?
No, I mean, this is one of the things that I think is really important to talk about, which is, people talk about the valuations of growth companies, and I've probably just scared everyone a bit by saying a third of the portfolio is in internet-related businesses, but we haven't really seen a kind of a bull market in Japan for many years now. We haven't really had this big repricing of growth in Japan that maybe has been seen in other parts of the world. So at the end of August, if you compare the enterprise value to the operating profits of the companies in the portfolio, the portfolio as a whole is on about 13 times EV to EBIT, which is, really not a very high level at all for growth-related businesses. And the portfolio is yielding about 2.3% at the current time. This is the investments in the portfolio rather than the trust itself, which again seems to me a pretty decent yield for a pretty growth-orientated portfolio. So I think those questions about valuations keeping us up at night is it's probably actually a bit more on the other side that we kind of wake up at night, wondering, more the question, at some point, surely these things will be, more positively viewed, and maybe it would be nice if it happens at some point in the future. So,
fair enough. And just taking a look at the political landscape in Japan, I mean, seeing as changes in prime minister are fairly frequent in the country, does that political backdrop have any effect on the way you're allocating?
Not really, and I think in many ways the answer is in the question itself there, that because the political change is often quite frequent in Japan, and obviously Mr. Abe, who was sadly assassinated recently, was a unusually long serving prime minister, but the rapid political change is really too quick for us, and so what we're focused on is more the companies over the long haul, and holding them through the political cycle. So, the turnover on the trust over the past 10 years is about 10% a year. So what that means is 90% of the portfolio roughly isn't changed year by year. So we're very much, trying to hold things for the long term rather than, trying to get in or out depending on, which politician is in charge at which time. The trends we're much more interested in are those long run trends of technology change and how things are changing in those longer and in our view easier to follow from an investment perspective trends.
Mm-hmm. Now you just mentioned the turnover is 10%. How does that number compare to the marketplace?
Well, I think in general, many investment managers are running with a much higher level of turnover than we do. I can't speak for all investment managers in Japan, but I think, changing just roughly 10% of the portfolio a year, I think is an unusually low level. But I do think it's consistent with what we're trying to do, which is to keep things fairly simple and try and hold these companies for the long run through the ups and the downs.
Mm-hmm. And I've got one question on demographics, which you also already touched on, but in light of the declining labor force, Japanese companies are forced to do more with less, basically. So how does that translate into investment opportunities, if it translates into opportunities at all?
Yeah, I mean, I think, obviously there are some areas of the Japanese economy where, the declining labor force, presents some problems, so the kind of low margin type of businesses that we tend to avoid. But one area we're finding a lot of opportunity in is in this kind of idea of what the Japanese would call digital transformation, which is, doing things in a different way. So for example, we've had a holding for a while now in a company called Infomart, and that company basically helps restaurants to do the ordering through an online system rather than the traditional kind of paper and phone calls type of system. And so it saves quite a lot of labour costs, and when those restaurants are under pressure in terms of being able to secure enough labour, it's very appealing to them. And so that's the kind of opportunity that we see in terms of being able to do things more efficiently. And I think there's still a lot of gains to be made in Japan in making some of these everyday processes more efficient than they are currently.
Mm-hmm. So one follow-up question from me before we move on to the audience questions. Would you then say that Japan's demographic challenges have given Japanese companies a valuable, expertise maybe in relevant sectors?
Well, I think one of the things that's most striking, I suppose, about Japan's demographic challenge is that actually, it doesn't seem to have a negative impact on society and the functioning of the country as a whole. And I think the reason for that is because the technology has been developing as the labour force has been shrinking. So they've been able to kind of keep going by just making things more efficient over time. And I think, in some ways the challenge is more for countries with a lot of young people where many jobs are becoming automated. And actually the question is, in the long run, are there sufficient jobs to go around is one of the challenges. But in Japan, the two seem to be meshing together quite nicely. And I think there remains a very large long-term opportunity for things to push out in the robotics area, especially push out from kind of industrial robots into more general automation. And I think the Japanese are quite well placed in terms of that.
Wonderful. Thank you. Now, moving on to the audience questions, which have been pouring in over the past 20 minutes or so. I'd like to start with this one, which is how are portfolio weights decided upon?
Yeah, so we try, generally speaking, to keep things fairly simple. And what we try and do is take a holding in a portfolio, and then we have quite a strong bias then towards not fiddling too much. So what we tend to do is we try and get a minimum holding, often of something of the order of 0.7% or something like that, more if it's a bigger company. And then we kind of track it from there and see how it's going. And sometimes, of course, we realise we've made a mistake and we have to sell it again. But sometimes along the journey, we get to points where our view of the prospects of the company are perhaps better than the market. And at that point, we try to add to the position if we can. And then we generally, are cautious about running positions, too big as a percentage of the portfolio. So the most recent example of a position going over 5% would be SoftBank.
Mm-hmm.
That got, to getting towards 10% at its peak, and that caused us to reduce the holding somewhat. And currently the holding in SoftBank is about 5% of the portfolio.
Mm-hmm.
But we also have a rule within the trust that we can't add to a position when it's more than 5% of the portfolio. So we're not forced to sell at 5%, but if something gets over 5%, we can't make any further additions. And our bias therefore is to reduce those very big holdings. So yeah, that's the process in terms of position sizing.
Understood. And that leads nicely into the next question, which is, could you briefly review the top 10 holdings and their year-to-date performance?
Yes. So in terms of, in general, the top holdings, there's a mixture of different things within there.
Mm-hmm.
So for example, we've got some of the big holdings are things like SoftBank. We've also got Fanuc, which is Japan's leading robot company. GMO Internet, which is an internet conglomerate. We've got Mizumi, which makes small automation type of parts, etc. So SBI, which is an online brokerage, and obviously there are others comprising the top 10. Those would be some of the examples. And in terms of the performance over the past 12 months, what we've seen is it's been a very difficult time for internet-related businesses. So many of these businesses were very in favour during COVID, and in the kind of previous 12 months, they would have all been at the top of the performance attribution. And currently, they're pretty much all contributing negatively to a greater or lesser extent. But we have also been looking at, within our risk team, we've been looking at how the earnings have been progressing within the portfolio. And what we've seen is that if we track the progress of earnings, then there's still decent progress with only a very small level of setback, whereas the share prices have been much weaker than that. In other words, it seems to us that the portfolio has perhaps become a bit cheaper, but obviously it may be that those earnings are going to have a challenge in the future. But equally, if they don't, then what we've ended up with is a portfolio with lower expectations than it used to, and we would think that for the majority of those internet-related businesses that there's nothing fundamentally wrong with them. They're still growing, and that over time they're likely to be re-rated back up again, and we'll get the performance back in that sense.
Wonderful. And then moving on to another area, which is what's your current situation like when it comes to on-site staff and Japanese language skills, for example? How important are they when investing in Japanese equities?
Yeah, this is a really quite a common question, because obviously we're mainly based in Edinburgh. Now, we've mainly been based in Edinburgh for the past 41 years doing Japanese equities now. So there's no big change from our perspective there. And we do have a couple of researchers, Sotoko and Akiko, who are based in Japan, and they obviously give us on the ground presence. And also within the team, Karen speaks Japanese. But in practice, we either do meetings in English, which is nowadays about half of Japanese meetings, or we use a professional interpreter to make sure there's no misunderstandings in terms of the communication. And when I speak to Japanese companies, instead of talking to them for an hour, I normally request an hour and a half meeting, to give time for that interpretation to happen. And I think the other big change has been that, as a result of COVID, we're actually probably in more contact with companies than we used to be, because Zoom is such an easy tool to use and to have a good level of communication with people. So I think although it's great to be able to get back to Japan and see people in the real world, in a practical sense, I think what we'll end up with in the longer run is a more hybrid way of doing things. Because I think it's great to see people in the real world, but you don't necessarily have to do it every single time. You can also speak online. And in many ways, the Japanese have made quite a lot of progress in their acceptance of these new technologies. At the start of COVID, it was very difficult to persuade a Japanese company to do a video call, whereas now it's just a completely routine type of thing.
Yeah. And then going back to SoftBank, which we haven't really talked about now, this person is wondering why, despite all the problems that the company recently had, you're still holding on to it.
Yeah, SoftBank is a really interesting one where I think the first thing to say is sometimes the perception of the number of problems that SoftBank has had, I think, is greater than the number of problems it actually has had. So if we look over the past 5 years, the SoftBank total return from the shares has been about the same as the Japanese index, whereas I think if you were to ask people how bad do you think SoftBank's been, most people would probably have a worse idea in their minds. And that's of course why it's a big part of the portfolio, is because it got to be a big part of the portfolio, and then we've sold some and it still remains a large holding in the portfolio. But in terms of the forward-looking case for SoftBank, there's really three things that excite us about it. First of all, we like the underlying mix of investments. Mr. Son's investing a lot in some early stage venture type of companies all over the world. Increasing exposures include places like India, where the internet is still at an earlier stage of development and there's still a lot of opportunity, as well as other things. We think that the shares trade on a big discount to the value of that portfolio. By a big discount, I mean the discount's about 50%, so really a very large discount. And then finally, and I think this is the most different part of our view, because the first two bits I think are fairly obvious, we think that Mr. Son is a very good investor and manager, and recently, they've been doing huge numbers of buybacks because the shares are at that big discount, which is very value added for the shareholders. He holds about 30% of the business, so the alignment is very good there. And he's recently been, reducing his stake in Alibaba and booking literally billions of dollars in gains from that, which people tend not to talk about so much. So I think in many ways, if we could all be all have as many difficulties and be as unsuccessful as Mr. Son, who right now I think is Japan's second wealthiest person, and we'd all be doing quite well. So that's why it remains a big part of the portfolio. I think it's a very obvious thing for a growth investor to be interested in investing.
Nice answer. That also leads to the next question, which is, what's your best and your worst investment of the last 10 years? Maybe SoftBank might be one of it or not. Over to you, Matt.
Yeah, SoftBank's been quite a good investment over time. We've had a variety of quite successful investments in the kind of the entrepreneurial space. So it's things like Hikari Sushin in the past, which we subsequently have sold, or GMO Internet has been a very long-standing shareholding. It does internet infrastructure and a variety of other things. And we bought into that business years ago now, and it's just kept on going. The dividend keeps going up, the shares, keep doing their stuff. So that's become a decent chunk of the portfolio. Mm-hmm. Also, SBI, the online brokerage, has been very successful. I think in terms of the worst investments, I think we're still very much waiting for Rakuten, the online e-commerce company that's subsequently been pushing into the mobile phone area, as in becoming a mobile phone operator. We've still been working, we've still been waiting for that one really to work out. The sales growth has been good over the past 10 years, but as they've invested very heavily in the mobile business, the losses have got bigger and bigger. And I think at the moment, there are two potential outcomes from here. One is that the company is right and that those losses will diminish over time, and that will become a very successful business over time. And the other is simply that they won't be able to gain sufficient scale in mobile for it to work out. So we're continuing to think about that one, but certainly in terms of businesses that had been unhelpful, very unhelpful to the trust over the past 10 years. I think that's the single most unhelpful business that we've held. Mm-hmm. And then the other category, I guess, of regrets are those businesses that maybe I haven't held and we haven't held that perhaps we should have done. So, for example, Fast Retailing, which runs the Uniqlo stores, has been a very successful business over time. Mr. Yanai is probably Japan's richest person at the moment from that business, and clearly that's one that we missed. But we're not going to be able to get them all. But I think we obviously always have regrets where we see growth and we weren't able to enjoy it.
Mm-hmm. And one question is based on performance, which hasn't been as successful as it was in the past. So how will that change going forward? What are you planning to change, if you're planning to change anything?
Yeah, I mean, these things, I think in terms of performance, it very much depends on the time horizon that you take. It's been a very difficult 12 months, as I'm sure the shareholders will have noticed. And, the trust is off by about 30% in absolute terms over the past 12 months, which clearly is very difficult. On the other hand, despite that, over the past 5 years, the trust has still delivered a return a bit ahead of the Japanese market, which is essentially what we're trying to do on a rolling basis. So in terms of our basic approach, we're not changing it. We're keeping going with the same strategy. Clearly what we want to do is find the growing businesses and invest in those and let them do the work over time. But I think one of the things that has changed is that we're really no longer paying a significant premium for the businesses that we invest in versus the underlying market. So that gives me at least quite a degree of comfort as to the starting point we're at now, because I believe very firmly that we have a portfolio where the underlying growth prospects of that portfolio are significantly in excess of the wider market. And if we're not really paying very much extra to the wider market to start with that portfolio, I think that puts us in a good starting position. Mm-hmm. But obviously, the proof will be in the pudding, and we need to see how things go over the next few years. But no, we're not changing anything. And I think I would also say that the level of setback that we've had has happened from time to time over the past 40 years. It's not out with our range of expectations. Mm. So although it's been difficult, it is something that unfortunately is a short-term risk of investing in growth equities in Japan. Is that from time to time the values of those businesses in share price terms can decline quite significantly. Yeah. And what we're trying to do during this time is just keep focused and keep plodding along as we would, when times are good. And we try not to change our fundamental attitudes. We're just trying to improve the portfolio over time. Mm-hmm.
And based on that, what level is gearing at the moment? And are you planning to change it in any shape or form?
Last 12 months, we've been steadily increasing the level of gearing. Now, part of that has happened just with the mechanics of the share prices being weak, but we've also been consciously buying more than we've been selling. And so the current level of gearing is about 17.5% net gear, which is pretty much at the higher end of where we tend to go. We won't increase the gearing beyond 20% actively. And at 25%, the board would request us, not to take it any higher. That's the position with the gearing. It's at the higher level for the past several years because we do think there's a lot of opportunity in them.
Mm-hmm. We also have a question around the yen, which is, do you think is now as undervalued as it was in the late 90s?
Yes, I don't know compared to the late 90s, but certainly the yen has become, lower and lower rated, versus, especially the dollar. Now, part of this, of course, is the dollar has been very strong. So, compared with the pound, for example, the effect is less dramatic. But, before Abenomics, we were at kind of 80 yen to the dollar, and currently we're at over 140 yen to the dollar. So that's a pretty big move over a kind of roughly 10-year view. So I think in that sense, when you go to Japan, you do experience this feeling of things being, quite lowly priced. So the problem with all of this is that we don't have any great insight in terms of the direction of the yen. And it's not a big part of our process. And we think over the very long haul, these moves in currencies tend to kind of come out in the wash somewhat for businesses because the business is something that has real pricing power over time. And so, we think it comes out in the wash. But certainly it has been interesting in the shorter term. It does provide a boost for Japanese manufacturing and the economy as a whole. And I think having gone through the Lehman's crisis where there was a big global recession and the yen became very strong, that was very painful for Japanese businesses. And I think if we're going into an environment where maybe global demand is a bit weaker, I think starting from this perspective of having a weaker currency is pretty helpful for the Japanese businesses because it helps them to maintain their market shares versus global competitors.
Got you. One question is also, do you hedge your yen exposure, and if so, how?
So we don't hedge the yen exposure, and also the borrowings that the company has are in yen. So the whole trust is basically managed on a yen basis, and there isn't any currency impact from that. Mm-hmm. Now, having said that, things are translated back into sterling to report, and any dividends are paid in sterling. So over the long run, we might have some more volatility in the dividends that are paid out and measured in sterling than they would be in yen. But essentially our policy is not to hedge the yen and to maintain any borrowings in yen as well, so that everything is in yen.
Wonderful. And we also have a more forward-looking question, which is, other than robotics and internet, which are both well-developed industries, which new industries do you see doing well in Japan that the trust has actually exposure to?
Yeah, so I think this whole idea of digital transformation, which goes a bit deeper than the internet. So we talked earlier about, for example, Infomart, but we also have holdings such as Bengoshi or GMO Internet also operate in the digital signing type of space. So I think that whole area is one of significant growth. We've also been investing recently in a company called Oisix, which does food delivery packs to home. And that's another area which we think is underdeveloped in Japan and could grow as it has in the West. So there's a variety of different areas which are still developing within the Japanese market. And I think the skincare area is another one where in the long run Japanese skincare brands are very strong, especially in areas of Asia outside of Japan. And I think that those brands probably have a lot more to go for, particularly if they succeed in China and other parts of Asia. So that would be another area of significant growth potential in the long run.
Great stuff. And then one final question before we wrap it up, which is, do you work with the team behind the Baillie Gifford Shin Nihon, and do you invest in some of their winners as well?
We certainly do work together. So Praveen, who is the manager of the Shin Nippon Investment Trust, is also the deputy manager of the Japan Trust. And on a daily basis, he literally sits behind me. So yeah, there's a lot of interaction between the two. And certainly there's the potential for companies that he's most excited about. So for example, GA Technologies, which is an online real estate company, is one that's come as an idea from Praveen and then gets into the Japan Trust. But also in a practical sense, there's not so much overlap between the Japan Trust and Shin Nippon in terms of the holdings, because Japan Trust is more of a kind of broad market exposure, albeit with a bias to smaller companies, whereas Shin Nippon only really invests in smaller companies, and in addition will also invest in private companies, whereas Japan Trust invests only in listed equities at the current time.
Wonderful. Matt, thanks so much. It was great. And thank you all for watching, and we'll see you next time. Thank you.